Trading Finance. Today's video will be about the pros and cons of day trading. Day trading is when you buy and sell a stock within a day. It differs from long-term investing. Long-term investing is when you buy and hold for over a year, over 5 years, 10 years. Think of Warren Buffett. Warren Buffett probably has the same Coca-Cola shares he had 50 years ago. Let's say this is a certain stock. A day trader looks to buy here and catch a move up and then maybe sell here. And that could be a 1% move right there. So a day trader wants to make their money within that day, and then, they're good for the day. That move up or that move down if they're shorting, and then they're good to go. That goes to one of our pros. You hold no overnight risk is one of the pros. Let's say during that day you traded Apple, you made your money, and now Apple could say anything overnight. Apple could say that their iPhones cause cancer, and it could be down 30%. Does that matter to you? No. You have no exposure to Apple or no exposure to the market in general. The market could do whatever it wants, and you're free from that. You're free from that risk. Number two is opportunity cost. Like I said, a day trader buys, sells, and then is cash overnight. That means every morning they have a bag full of cash ready to spend it. Opposed to somebody who's a long-term investor, let's say they have Apple, let's say they have Facebook, their money is tied up in those, which means they just have to, even if Apple and Facebook is down, they just have to weather that storm. But you have no constraints. You have cash ready to jump on other opportunities. You may have a new hotshot stock who is just going up. So you throw your bag of money over there, you make your money, you make 10% or whatever, and then you're good to go. If your money was tied up somewhere else, you wouldn't have that money to spend it. It's like winning the lottery. When you win the lottery, you have two options. You can either A, take the lump sum, whatever it was, $700 million, or you could take little payments every year. Which one would you decide? Well, it's better to take the lump sum because of opportunity cost, which means you could put that money in an investment and watch it grow over time. Your money is more valuable today than it will be next year due to inflation. If you win the lottery, always take the lump sum. Unless you're completely reckless, then talk to a financial advisor. Last thing is, I do believe it's a skill, and it's one of the skills that you can make big bucks, and it's essentially you can make money out of thin air. The reason I believe it's a skill is because I've known people, I've met people, and I've learned from people who are fairly consistent, not fairly consistent, they are consistent over years. Not just this year, they didn't just have a good month. They're good over time, and I've seen their portfolio grow, and it's a legit portfolio. It's not it's not Photoshop or anything. It's one of a skill that, you can make big bucks with day trading because you could really leverage your positions if you're good at it. But it is a difficult skill to learn. But since I do know those people exist, I know it's a skill, and I know that you can actually become better at trading. A lot of people look down on day trading because it is difficult. And I'm going to put that in a con. A lot of people do fail. It's a high fail rate. The odds are stacked against you when it comes to day trading. There's a lot more cons than pros. And the reason why it's such a high failure rate is because A, it's emotional. You're dealing with real money. B, it's expensive. And C, people fail at everything all the time. Let's say you want to be a cook or a chef. You go to cooking classes. You start off, you're no good. Your food doesn't taste good. You may get people sick. Okay. Over time, you get better. You become a better chef. With trading, if you're no good at trading, you lose money. And there's only so much money you have. So your money may run out before you become a good trader. And like I said, people fail at everything. People fail in business, people fail in sports. But the reason why day trading is so talked about is because it's so accessible to everybody. Anybody can open a brokerage account, they could trade, and people lose money because they're uneducated, they don't take it serious, they want to get rich quick, and it's very emotional. Whenever somebody comes to me, whenever somebody new comes to me in the market and says, hey, I want to start investing, I'll say, well, how comfortable are you with risk? Are you okay with seeing your stocks go down 10, 20%? They always say, yeah, they're okay with it. But when that time does happen where they actually see the red, where their 5,000 portfolio is now $3,000 portfolio, they start to panic. They start to sell stocks prematurely. They start to fight back losses. They try to over leverage they try to win back their losses. And it sounds like a gambling mentality. And it could very well turn into gambling if you allow it to. Number two is taxes. On your profits, you get taxed just like everything else. But you have short term and you have long term taxes. Short term is if you buy and sell and you sell it within under a year. So that day trading counts as short term, and that's taxed at a higher rate. That's around 35%. With long term, if you hold it for longer than a year, you're only taxed at 15%. Short term is no good on taxes. Long term is better. Speaking of taxes, we have what is called the wash sale rule. Let's say you trade Apple and you take a loss, right? You take a $300 fat L. If you try to trade Apple again within the same 30 days, you can't write off that $300 loss. In taxes, you could write off up to $3,000, but if they see that you traded the same stock within a month, you can't write off that loss, and that's a wash sale rule. So that's another. For me, I trade pretty much the same stock, so that'll hit me if I take too many L's. Number four is fees. You got your commissions, you got margin fees. If you use margin, you got borrow fees. There's fees stacked against you when you're day trading. I know a lot of brokers don't have commissions anymore, but there are some that do, and there's still commissions on options and commissions on futures if you trade it. If you trade margin, if you use the broker's money, there's fees on that. And if you short stocks, you got your borrow fees or your hard to borrow fees if you short a stock. So for the most part, cons do outweigh the pros. You could really be good at trading. I know people who've done it. I've had good years myself, but there's people I know that are they can make money out of thin air. But another thing, you get a lot of arrogant people nowadays who say stocks only go up. If you look in the past 10 years, essentially they do. Coronavirus, you see these little drops. Try telling somebody who invested in 2000 that stocks only go up. That person might slap you in the face because they had to watch their stocks go down for 2 years, 38%, only to see it go to break even after 7 years, and then only to see it go above break even after 13 years. So we're being spoiled right now with this bull run. You could probably ask the people who were around in 2000 if sometimes trading was a better idea. But long-term investors, they just got to buy and hold. If you want to day trade, my advice, take it serious. Take it like it's a business. Use a little bit to day trade. Have money away for long-term investments and have cash available. Trade responsibly. Good luck.